Good morning, traders and investors. My name is 𝗧𝗴𝗀 and I'm the senior strategist for WealthPress. Today is Friday. It is September 10th. It's about 7:56 in the morning. The market's going to open up in a little over an hour and a half. I'm here before the market opened to give you a good preview of what to expect on this Friday. Now, before the opening bell, and this is a great way to teach you guys how to analyze the market pre-open, to give you a good understanding of what I look at, the indicators that make a difference, and how you should analyze the market. It's a really good way to get you set up, and I'll also give you some hot stocks, maybe to the long side, maybe to the short side, depending on which way I'm seeing the market going. So please, please, please stay tuned to these videos and watch them. They'll teach you how to get inside my head, and that's pretty valuable in my opinion. So again, Dow futures are up about 160 points, which means the markets are not going to open random. Anytime it opens up above, below positive 75 or below negative 75, in other words, 75 positive or 75 negative, anything in that range is random. Anything beyond 75 points on the Dow is not random. This is definitely not random. Look at the E-mini S&P. This is a nice little melt up on the market. In terms of why, the reasoning behind this, I'll explain to you. Biden initiated 90-minute call with Xi, which centered the head of China, which centered on discussing a way ahead for the U.S.-China relationship. That's one of the biggest factors causing the market, especially small caps, to dry up right now. The White House said the leaders during the call agreed to engage openly and straightforwardly. Yeah, right. Yeah, with China. Yeah, don't hold your breath. On issues where nations are at odds and where there's agreement. I don't even know what the hell that means. Basically, they called and agreed to act in good faith. President Biden and Xi's phone call has spurred hopes of a thaw in U.S.-China relationship. From your mouth to God's ears, I hope so. Investors appear to take in stride a decision by the European Bank on Thursday to dial back some of its massive emergency pandemic support for the 19 countries. The biggest factor, Delta variant, consumer confidence, and spending, and bottlenecks. But these are the biggest factors driving markets right now. Delta variant, consumer confidence, and spending. Fed officials have indicated they expect to dial back stimulus measures by year end. Now, even though the market is really, really bullish, take a look at the bond market. Remember, I was telling you how it's going to be in a channel. Now it looks like it went all the way up. It went up almost 2 handles yesterday to 150, almost topped out, and now it's down to the one. Now we're back in the middle of the channel. And I think we're going to continue moving within this down channel and finally break it down towards the end of September, maybe early October. But I don't think we're going to see interest rates go much lower past October. I think the Fed is going to start putting more pressure on the bond market in terms of giving up some of that monthly stimulus. I think 120 billion a month is just nuts. In terms of news, yesterday we had jobless claim. The number was below 350,000. I think it was, let's take a look. It was a really good number. There was nothing wrong. I think it was 315. It was substantially below expectation. Yeah, 310,000. So it was a really solid number. Today, we've got the PPI, Producers Price Index, which is going to clue us in on inflationary pressure on the producers level, not the CPI, which is the consumer level, on the producers level. They're looking for Producers Price Index to move up. Last month, we saw a 1% rise. Now we're looking for a 0.6% rise. On a year-to-year basis, we're looking for 8.3% rise. So if the number comes out below 0.6 or below 0.83 or above 8.3, substantially above or substantially below, it may shift the market. But last time we exceeded the index by a good following 1% monthly increase, both the overall ex-food, ex-energy rates in July, as you could see here, on a month basis. So it'll be very interesting to see if we do increase 0.5 and 0.6. Ex-food and energy on a month-to-month is the one you want to look at. Then on a year-to-year you want to look at. But I prefer to look at it without food and energy. I just want to see how much it's increased. Hopefully it hasn't increased too much, because if it increases too much, then inflation is running way too hot, and there's a huge issue for producers' prices. So let's keep an eye on that level, all right? Again, put the call ratio. We went up yesterday. Now we're again below 0.82, inside the range. Don't expect too much from the market. And again, choppiness in the bond market dictates choppiness in the stock market. Matter of fact, if you look at the stock market, you will see, let's look at the cash, that we're cooling off a little bit. We cooled off a little bit. Now it looks like we're a little bit higher. But honestly, don't expect much from this market. The put to call ratio, all the internal indicators, the divergence that we're seeing right here. I mean, look at this thing. Indicator can't even, we're at all-time highs. The indicator can't even go to 70. That's not happiness. And by the way, this divergence between price and relative strength is one of the best indicators. When you see price going higher and the RSI is going lower, not good for the market. So I'm not expecting too much. I would be more inclined to fade these rallies than to trade these rallies. So as you could see here, the U.S. stock market, let's see here, indices. As you could see here, the stock market's really, really bullish, but I'm not feeling it. Also, if you look at momentum levels, you will notice right here that only 46% of stocks that are trading above $2 is trading above the 50-day moving average. So while the market looks really bullish, it's really not. And 200-day, only 52%. So the market looks a lot more like this, like the Russell right now. It looks a lot more choppier. There's only a few stocks. Look at that. Very, very choppy. Very close to the 50-day moving average. So whenever you have outsized moves away from the average and the market is choppy, the best way to handle them is to fade them. So the market is opening up really, really high, and it's a choppy market. What do you do with it? You don't go with it. It's not a breakout market. We're still in September. We're still in the summer doldrum. The market is still really random. Most institutional traders, yes, they started coming back yesterday, but most are not going to really pick up till the middle or end of next week. So I'm fading this rally, and I'm bearish. So I've got two stocks that are bearish right now, and I think are going to go down, and we're fading the downside move. So we had a swing low. The trend is moving down. The stock is compass pathway. And let me show you long-term chart, lower highs, right? The 50 is below the 200-day. You could see it right there. And we're pulling to the 50-day moving average, and I think we're going to break down from the 34 level all the way down. From this level here, I would prefer to break below the 50-day before going short, but I think we're going to break this level down and go all the way to the 28 level. And if we break above this bar, I would just get out. Another one. Now, what does Compass do? Let's take a look at what it does. Mental health. Ah, boy, mental health. In New York, mental health in New York right now, forget about it. Oh, boy, I shouldn't have said that. Last stock to short. Again, look, notice lower highs. Lower highs. The 200, actually, the 200 is above the 50-day. The 50-day is below the 200-day. If you're looking for a long, you want the 50-day to be above the 200-day. But in this case, you want the 50-day to be below the 200-day. We broke down. The gap looks like it's going to get filled, but I don't think it is. It would have already come up, I believe. I think this is going up as much as it's going to go, maybe a few more points. But I think GoDaddy is a short all the way to the 69 area. And I think if it breaks the 69 area, this thing can go all the way down to the 40 level. Now, I don't think it's going to go to the 40 level tomorrow, so don't get too excited. But I think there's a good downside potential. And I just don't see this gap being filled. If anything, maybe it'll go from 76 to 78. So you may want to wait a little bit, but I like GoDaddy for a short right now. So again, when markets are choppy and you see a big up move, you want to fade that. And again, put the call ratio, momentum levels. Let me go back to these momentum levels. I mean, they're awful right now. I mean, this is just awful. Look at that. Awful, awful. Don't let this market fool you. Do not let this market fool you. And again, CMPS, 50 below the 200-day, pulling back up on the way down. And GoDaddy. GoDaddy. Who can forget about GoDaddy? Do you guys remember how popular GoDaddy was like 15 years ago? All those commercials on Super Bowl. What a company. And I still think they'll do well, but I think that industry is saturated with domain name sales. And as you can see here, it hasn't really gone up too much. This breakdown, I think, will break further. Now, I know it's Friday, and I know you guys have plans for the weekend, but I've got something really, really important that I got to share with you. Imagine if a strategy existed that allowed investors, just like you, regular folks, to make money regardless of the direction of the stock market. It goes up, you make money. It goes down, you make money. It goes nowhere, you make money. How do you lose on that case, right? Well, folks, stop imagining. You don't have to imagine anymore. Wall Street legend and 10-time heavyweight trading champion Chuck Hughes, he has a strategy that's giving everyday traders, people just like you, everyday folks, not Mensa geniuses, everyday folks, the chance to profit from thousands of stock, regardless if the market is going up, down, or flat. And boy, oh boy, if you can make money in a flat market, you're doing something right. Investors are lining up to learn more about this strategy, especially with how vulnerable the markets are right now. Folks, investors could make some moves later on in this year that could be big, 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 big. So now's the time to prepare. The market is setting up and there's some moves ahead. Now, before the big win players on Wall Street move the markets, it's time for you guys to get in on this opportunity. Want to know how the strategy is even possible? Click on the link below to learn more about Weekly Profit Generator. You've got to check this out. Folks, interest rates could make moves later on this year. And if that happens, the market can move. I mean move. Bigwig players on Wall Street can make a killing. I want you guys to get in ahead of them. It's possible. Click on the link below to learn more about Weekly Profit Generator. You guys are going to love the strategy. It has a really high win rate, and Chuck knows his stuff. Follow the link below. Learn about it now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, stay ahead of the market by watching videos every time I put new ones on YouTube. Be the first to be notified. Get trades like this and have an amazing weekend. Bye, everyone.